Welcome, everybody. I think we're in a bull market again. Tariffs don't seem like they're a problem anymore. The SPIs and the Qs are 3.5% from all-time highs. So we got to bring in the boys and figure out what's going on. My name is Michael Camo. I'm Director of Content for T3 Live, and I'm here with Derrick Oldensmith and JR Romero. So what do you guys think of all this? It seems like it's party time every day. Debt downgrades don't matter. China headlines don't matter. What matters?
The buyers matter. That's all that matters. The buyers, they're never ending. The buyers are everywhere you look. They don't disappear. Every time you try to go down 10 cents, they're there. They don't stop. It's the buyers. It's all that matters. The buyers matter until they stop buying, in which case then they won't matter anymore.
Okay, so when
cheer to that.
So when somebody says, why is the stock market up? Can I just say more buyers than sellers? Is that okay?
100%.
Okay, JR, what do you think of this? Like, we've seen growth stocks. Captain. I like the sound. I kind of want to be an admiral, but I'll settle for captain. Okay, JR, what do you make of this? We see, growth stocks are going wild. A month and a half ago, everybody wanted to jump off the cliff, but now it's like total opposite. So what do you think? What do you make of this?
I'm a day trader. I go with the flow. It's disco time. I put on my mini skirt glow sticks and start going crazy. What are you going to do?
Now that's what we need to see in the room.
There's a special subscription for that. Just contact Amber at t3live.com.
Okay, now.
Poor Amber. She doesn't deserve this. I'm sorry, Amber.
Okay. So we have a great comment from Jacked Orange Man who's saying golden age. So so both of you guys are very active short-term traders. Is this the golden age for day traders?
It's another day that ends in Y, man. As long as we go up or down a lot, I really don't care.
And, okay, do you think speaking of Orange Men, do you think he can keep this going for like 3.5 more years?
Look, I think we have a little bit of excitement in the market today due to the fact that the Freedom Caucus looks like they're going to flip in Trump's direction, and we could have the House signing a bill today. So, the markets are advancing of that. The Qs paired losses early, triggered a second leg on a two-wave corrective, took out the declining tops line, and there was much rejoicing. Okay, that's all true. I'm not sure, depending on the kind of news we get in the next week or so, I'm not sure how sustainable this is. Are we looking like a retest of all-time highs is coming? Absolutely. And, you get through 522.5 in the Qs, and you got leg 2 or leg 3 advance beginning, or literally right there.
Okay, so like, do the tariffs, is that just gone from everybody's mind? Like, am I crazy, or does it feel like people have put it in the rearview mirror? Bueller.
Here,
because
myself.
Okay.
So they're not gone. They're just we're getting consistently positive news. I mean, it continues to be the same thing that it's been for months. Every time there's a reduction in tariffs, the markets go up. Every time there is an increase in tariffs or an increase in tariff rhetoric, the market goes down. It's the same thing over and over and over again. And we have increasingly pulled back on tariffs, and we still need to see where they settle. I don't think that it's going anywhere, because it's going to matter more when we get closer to these dates where the timing runs out, which I think are early June and early July for the rest of the world and China, respectively. So that's happening, and we have the other big question is, how are tariffs going to impact economic data, which we still haven't seen at all yet. We might see a taste of it in the May numbers in the beginning of June, and probably more so with the June numbers in the beginning of July. So it'll be interesting to see what those numbers look like, and then we'll finally know the degree to which tariffs are starting to impact the economy. I mean, if you look at Walmart's recent earnings report, they said that they haven't even begun to raise prices yet, but they're probably going to have to. And they said probably in late May. So you're not even seeing the impact of those in the economy yet. And we'll see. I think that there's a good chance that we'll see a return of an increase in volatility this summer, June, July, August period. But for now, it is full steam ahead. It's just been consistently positive news on top of a massive positioning squeeze. No one was invested for this move. No one had upside optionality, meaning from like a hedge fund perspective or a long-only fund perspective. JR obviously did. And, that's just where we're at right now in the wild positioning squeeze, which can increase through these highs of buys and the Qs from this week. If we break highs, Qs are basically attempting to do right now, you might get a whole additional wave higher of a positioning squeeze. So it'll be interesting to see if we do break highs and start to squeeze up again, which I think is a real possibility. If you see the VIX move up with it, that would be a really interesting situation.
Okay, all right, JR. I heard a rumor about you today that I want to address. So somebody told me, I'm not going to say who, that in the room you predicted Bitcoin would go to 200,000. Is this true or false?
Listen here, kids. This is a public safety announcement. All right. Friends don't let friends go long Bitcoin over 100,000. Okay. The context of what I said that in is, disclosure, I'm long Bitcoin off 63,000, still holding. I believe 126 is next. And I said, this is going to get stupid to the point where if you look at the measured move extension, they're probably going to take this to 200,000. I was not, and it was more of a public safety announcement than a bold, happy prediction, if you know what I mean. Okay. So.
Okay. So just so we're clear. So if it gets through 126, 200 is a possibility.
That's what I'm looking at. And that's what the chart says. I mean, this is all. It reminds me of that scene, Fugazi from The Wolf of Wall Street. It's such a ridiculous asset class. It's not any of the things it purports to be. It's not a hedge against inflation. It's just it's basically the cocaine of risk on assets is what it is. The devil's cocaine. So you just got to be real careful with Bitcoin.
And that's saying something, not just regular people cocaine. It literally Lucifer's cocaine. Okay, all right. So related to this, so you floated out a $470 target on MicroStrategy a while ago.
Mm-hmm.
Is that still realistic?
Yeah. Let me share the chart space.
It's kind of funny when you think about about the devil's cocaine, how speculative assets have changed. It used to be tech stocks, and then now we have cryptocurrencies and NFTs. So what's next? Could you imagine?
Oh my God, you're buying Motorola. Hold on a second. All right, here we go. I mean, this stuff is so stupid and crazy. All right, so here's MSTR. Let's go to the 65-minute chart. So I called it long.
You're showing a SPY chart on the screen, JR.
How is that even possible? Hold on, that is wrong. 1 second. Let me just technical difficulties. My apologies. Are you seeing the right chart now?
Here's MSTR. Yes, beautiful.
Okay, so we had this beautiful declining line here, and when we ate through the anchored VWAPs, we pinched, and we retook the 331 handle. We called the long here, and MSTR. It's one of those trades where you just roll your eyes and you just go, okay, this is ridiculous, but it's going to go higher. Now MSTR is doing like a top, maybe building a topping inverse head and shoulders type of base, and I expect the next leg to retest 445 right here. like so. That gives you the measured move off the inverse head and shoulders base. And then, 470 would be the secondary move. That's what I'm looking at. Usually, like MSTR, it's almost like a topping indicator. It's like the, like the agreed and risk indicator. Like when it starts to get a little too frothy, it's time to get out of crypto and risk assets. I mean, I remember Derrick just jumping up and down like a Jack Russell Terrier back here on November 21st. He was like, I can't believe this. This has to go lower. I mean, you shorted this for what, 150 points, Derrick?
Yeah, something like that. I did pretty good with that one. I kind of
So
caught almost the whole move. Yeah, down to 250.
Yeah,
really.
Man, you killed it. I mean, this is one of these names that's really just for me an indicator of a frothy market and things that have gone too far.
Okay. So let me ask a dumb question to both of you guys. Have things gone too far? Because, we've seen the booms in HIMS. Webull is starting to wake up a little bit today. Like, have we gone too far too fast?
I think the way you said it is the right way to say it. Too far too fast doesn't mean that we can't continue to move higher. I just think that the rate of acceleration that we saw more last week than this week with the market can't continue at that speed for significantly longer. We need markets work in periods of expansion and consolidation over time. That was a big expansionary period last week. Another one of these weeks, we've seen several of them in the last 2 months of just record breaking. You got to look back in history. This was the best week since 1980, whatever. We've seen so much of that over the course of these last 2 months. And again, that's an expansionary period for the market. We need the market to contract a little bit, get a little bit tighter, and then you could get another leg higher. You could make an argument that that's kind of what's happened this week so far. We've kind of more gone sideways a little bit. We've let the moving averages catch up a little bit. That could actually propel us further. I kind of think that even though the ADMA on the daily chart now is caught up in the SPYs and the Qs, that we actually still need some more time. With that said, I would harken back to what I was saying earlier. There is the potential of, I think, one more big positioning squeeze if we really start to break through this week's highs in the S&P this week. You still have massive buying coming from CTAs. You've got corporate buybacks buying $5 to $6 billion worth of stock a day. These are just massive numbers of a forced bid. And that forced bid, it doesn't care about tariffs or politics or technicals or fundamentals. It doesn't care about anything. It just says, we're supposed to buy, so we're buying. And for most of this up run, it's been in a fairly illiquid tape also. So that forced buying hasn't had much liquidity to be able to buy into, which has further propelled this market higher into this huge move. So I don't think that the rate of expansion higher that we've seen can continue much longer. I wouldn't be surprised if we are able to break out. This is an if-then statement. If we're able to break these recent highs real soon, that we get one more big squeeze leg higher. And then we might see kind of the return of some degree of summer volatility. It would almost be the maximum pain trade, right? No one was prepared for this up move. You're starting up here to create all of this forced buy-ins from people that were under positioned for it, just for then a potential of a return of volatility in June, July, August would be maximum pain on both sides. And as we know, the market just loves to distribute the maximum amount of pain to the maximum amount of people.
Okay, so what do you think? Derrick, this is to you specifically. Does the market want anything specifically, like better economic news or actual resolution on the tariffs? Like, does it want anything specifically?
Sure, it wants all those things. It wants the tax deal done. It wants stimulus. It wants the Fed to cut. It wants clarity on trade deals. The question is, how much of that is the market priced in right now at this point of the move? And I don't fully know the answer. I mean, we're still seeing the market tick higher on good news, like JR was saying earlier. Some progress on the tax bill really boosted us up from a gap down this morning to, especially in the NASDAQ, just a crazy upside move. But I think that we're starting to get to a point where negative news can be more impactful to the market lower than positive news would be higher. And that is the opposite of what I've been saying for weeks. Late April, early May, it was the complete opposite. It was like, yeah, we're ticking down on bad news, but we're ticking up big time on any positive news. We're getting close to most of it being, I think, priced into the market. And then it's just a matter of, what do these deals look like? What happens when we get closer to trade deal pause deadlines and the potential of what the economic numbers look like over the course of next few months?
Yeah. Can I just add something to that?
Of course.
We also have another boogeyman that are not a lot of people are talking about, but I think is really to a certain extent been affecting the markets, and that's treasury yields and the bond market. That is something, you get over 4.5 on the 10-year yield and things slowly start to break. This week we had a development in Japan, the 20-year government bond auction, the weakest in like 30, 40 years. I think the weakest since 1987. And the tail of that auction actually widened substantially. And, you're going to coming into some weak bond auctions in the next couple of weeks. You got to really watch your 10-year yield and your TLT. That could be a real, cold shower for this market. So that's something that we're watching every day very, very carefully, and watch Japan for sure.
It's incredible that the market's been able to ignore it even thus far. I thought that this TLT 85 has been such an important support level from January, from the April equity bear market low. Recently, we tried really hard to hold it even this week. And now this morning we gap below it, and it still hasn't really triggered any selling from equities. But you can see it, and I know, JR, you love the IWM. You can see it with the weakness in the IWM, because that's the stocks that get impacted most by the interest rate situation. Whereas we also have seen in history that when interest rates start really flying higher like that, names like Apple and Mag 7 stocks almost become safe haven names. Apple doesn't need to raise cash at higher interest rate levels. They issued like 40-year debt in 2020 at like 1.5% or something that's just completely insane and ridiculous. Insane. They didn't even need to do it. They just did it because they could. And, that might also be part of this IWM weakness versus QQQ strength that we're seeing right now.
Okay. All right. Speaking of the QQQ strength, I have a hard time saying that. So Nvidia reports earnings next week. And Nvidia is another one. A month ago, left for dead because AI is over, and now it's roaring right back. So, I mean, I guess, like, what do you guys think of the whole Mag 7 environment right now?
JR, go.
Oh, okay. I was giving you the. I was trying to be polite. Okay. So NetGex on if you're looking at gamma exposure, you have a giant call wall at 140. It's gonna take a lot to get over that, through that, and to get price acceptance over 140. This weekend, Nvidia was one of the darlings on my Sunday watch list that I shared with the team. I thought there was gas in the tank to 140 for a day trade. I think it looks good. Tesla, the Max 7s, we bought Tesla at 294.80, sold most of it at 350 this last week. It was a great swing. And I think it may have some gas in the tank if it can get through that, that 350 GEX level. We'll see what happens. Google is going absolutely bananas today. They got that Google I/O event. It's been very, very volatile. I never thought I would actively day trade Google again until this past month. It's been bloody fantastic. I was scalping it all morning. The Google, I think, is going to become more and more tied after its woes with Apple and so on and so forth. It's going to become much, much more tied with the quantum names as it starts to potentially lead in that particular rubric. And I think that we may see more upside on Google. Netflix has been amazing. We called that 1,200 about 3 weeks ago. It's been great. Amazon, I don't know if it's Jeff Bezos selling or concerns about discretionary spending, but it's been dead to me and the world. Microsoft, wake me up when she gets over 460 is my life motto. Meta's due for a pop, but it's been plagued by bad news recently, and it could not sustain that reaccumulative flag there around 662. So it's still in it's still in a bullish context, but not my favorite. So that's my overall thought. Now, I think that the worse things get maybe with the bond market, the more you're going to see money spill into mega cap tech. Remember, in August, the Max 7s were trading like utilities for a while there when we had the whole yen freak out. So I'm bullish overall. I think you get the Qs back over 522.50 and 523. If we get a close over 523 today, I think it'll be really, really bullish for tech. But you have to approach this market really cautiously. Okay, we're not in 2020 or 2021 anymore. There's just been so much volatility. It's a day trader's dream, but if you're trying to hold a lot of these on a longer term basis, it's a little bit more challenging in this environment.
Okay, Derrick, what do you think of the tech environment heading into Nvidia next week?
Yeah, I mean, semiconductors have really led this market higher in May. They've been the leaders, and Nvidia is probably first and foremost on that. But Micron has woke up in a huge way also. And
AVGO.
Yeah, and with Nvidia, it's like you're seeing every day more deals every day. You just saw Elon Musk come out and say that the XAI company or whatever is going to buy 1 million Nvidia chips. You're seeing chips getting sales opening up to the Middle East. You're seeing Jensen Huang coming out and saying that attempting to block China from buying Nvidia chips is a failure. I'm not going to say who said that first, but Jensen Huang said it most recently. That just opens things up. I mean, the business is incredible. It's running full steam ahead. It's leading the NASDAQ higher. I have no idea what the earnings report's going to look like, but I struggle to see it being bad. We'll see what it looks like versus expectations. His expectations might be pretty frothy, but yeah, I mean, great companies.
All right. Okay. All right. We're going to move on to something a little more controversial, and I think everybody in the audience knows where this is going. So we had a huge disaster last week because people just don't deal with fruits and vegetables well over here. Okay, so I was eating at Outback Steakhouse a couple of weeks ago, which was a fantastic experience.
Oh no, you didn't.
Yes, I did. The steak was terrible, but there were some good sides.
I'm taking you to Gallagher's immediately.
Okay, all right. So this
Derrick and I are going to duct tape you to a chair and take you to Gallagher's. What's wrong with you?
Listen, I've had plenty of great steaks in my life. The Outback steak was not good at all. It was overcooked. I'm not going to get into it, but the blooming onion is out of this world. Okay, so I want to ask you two gentlemen, if you had one day left on Earth and you had to go to a chain restaurant, and this could be anything from McDonald's to Chili's, it could be Ruth's Chris Steakhouse, where would you go? What is the greatest chain restaurant on Earth? It could be McDonald's, it could be Wendy's.
Chipotle. 100% Chipotle. Going to Chipotle. I'm getting a burrito. Not this burrito bowl nonsense. I don't respect you if you get a burrito bowl at Chipotle. You get no respect. You get the burrito. You make a mess all over your hands and face, and you get that juice everywhere, and that's it. Well, when I am out here in Idaho, it's like, I don't know, like stepping back in time. There's no Chipotle anywhere. The first thing I do when I get back to New York City, the first thing I do is I go to Chipotle. I don't even know if I walk into my apartment. I go to Chipotle. I get a burrito. So that's a very easy answer.
All right. I'd like to, on behalf of T3 Live, I'd like to apologize to the country of Mexico. That was the worst answer I've ever heard, because it's not a real burrito. Chipotle, listen to me.
Chipotle is not Mexican food. That's like saying Domino's is pizza. All right? Domino's is not pizza.
True.
Chipotle is not
use
Mexican food.
but
Domino's is
words-
Domino's. Chipotle is Chipotle. If I want Mexican food, I'm not going to Chipotle. I'm going to a Mexican. I got some great Mexican in Idaho, but I don't have Chipotle.
Words matter, because let me tell you the problem with Chipotle's so-called burrito. They don't seal it. A real burrito, you wrap it up, it goes back in the pan to seal it. Like
to seal it, you get a Mexican cholo with a torch.
This is worse than the grapefruit answer from last week. Oh God! All right, Derrick is on suspension. Okay, JR.
Derrick, we can't be friends anymore. Chipotle. Oh my God!
I could understand.
Listen.
I could understand Chipotle, but the Chipotle burrito has zero structural integrity. It's a big sloppy mess. Okay, JR, go on.
All right, listen. It's very simple. You find yourself a 1965 Cadillac Eldorado limousine, and you get yourselves to the closest Smith & Wollensky, okay? That's how you do it. If you got one day left to live, and it's got to be a chain, Smith & Wollensky, you get the deluxe ribeye for two, and you eat it by yourself.
And
you ponder about the end of the world.
Do you wear like a nice shark skin suit?
What's that? And you play Leonard Cohen tunes the whole time. That's how a man does it.
I was thinking more like you don't put on like a John Gotti suit or anything.
That works. That works real good.
Okay. All right. Another controversial.
And you call Derrick and you go, "How's the Chipotle?"
Yeah, I'll take the Chipotle.
Over Smith & Wollensky's. Oh my God!
At the end of the world, yeah, on a regular day.
How are we even friends, bro? Chipotle. All right. Okay.
This is. I don't know if I could do this anymore. Okay.
I don't know why you take us to these dark places.
Let's move on. Okay. All right. Anybody like anything for the next week?
Where's Sammy?
Hello. Yeah. I mean, I have a really long, crazy watch list. I mean, do we really want to do this right now?
You could just name. But this, just give me one.
Just give you one. Let me go through the watch list here. Oh Lord. So I was really bullish AVGO this week for the buy setup trigger today. I see this taking at all-time highs in short order. We already went long ARM, beautiful piercing reversal today. I see this in the high 140s. We called out Robinhood on Sunday night. You can see the piercing reversal Monday morning. This one's going to 70, 75. Stat all-time highs is 85. I'm kind of ashamed to say it, but I'm just going to go ahead and say it. I think SMCI is due for a bounce off of 41.87. I understand. CRWV was top of the watch list. This one is insane. Okay, I'm not like friends don't let friends operate heavy machinery or trades CoreWeave, but we called it through 89.88, and it's at 108 today. That was on the Sunday watch list. This GEV Vernova piercing reversal on Monday. Measured move targets like 640 on this thing. It's absolutely out of control. I mean, that's the thing with this market. It's a dangerous market. It breaks trend all the time. The tape is psychotic, right? You'll be in a really weak, selling pressure type of environment, getting ready for a markdown or a flush, and the orders come in, the order flow improves, and all of a sudden you're in markup territory in 3 hours or less. It's absolutely insane. So it's been difficult to swing, but a lot of these leaders look really, really good. My watch list for this week was like 40, 50 names, and most of them did really great. It's a really tricky tape,
Okay. Thank you, JR, for sharing one idea with us. Okay.
Oh, sorry. I'm terrible at following directions.
I can tell. All right. Derrick, how about you? Is there anything you like here?
I like having some VIX upside exposure here. I currently have some VIX $25 calls. It's not a huge position. I'm kind of building into it slowly right now. I mentioned earlier that there's a potential of a positioning squeeze, especially if it can happen this week, if the market breaks the highs that have been put in this week. So the Qs are basically attempting to do that right now. SPIs are still a little bit further away. But I like the idea of having some VIX upside optionality because, especially if you can get a little bit further out, like I said, mine's through July. You could benefit from the market squeezing higher because there's a chance that the VIX actually begins to do it with it at a certain point. You can also benefit from the potential of an increase in volatility this summer, like I was saying earlier, if these economic numbers get worse, or if you see hectic headlines as we approach the trade pause deadlines. And that makes sense, especially if you're coupling it with owning some of the relative strength in the market, owning some of the semiconductors, owning some of the strong stocks that are out there. So you could potentially make money on both sides if the market breaks higher and squeezes higher, and you're making money on your Nvidias and your Teslas and your Googles, and the VIX is moving higher with it. And if that ends up failing because the whole market cracked because economic data gets worse, well, you're still probably making money on the VIX trade, even if you're getting stopped out of some of those high-flying leaders. So that's something I still like right here. A lot of other things from the equity market. I have strict rules against not chasing. I say it all the time. Like I would rather let stocks just completely go without me than chase price higher. A lot of stuff feels very chasey to me right now. So I'm just really being very patient. And that's not to say that this market's not super bullish and the technicals aren't super bullish. I think that the only way that the bears truly regain control of this market is if you see the SPY get below 570. We're very, very far away from that at that point. At this point, $23 above it. So the market looks like it's full steam ahead. It looks like it's in complete bull mode. But you definitely are just in an environment right now where headlines are moving so fast and this market's moving so fast that the one thing that can really destroy good technicals is the wrong headline. And it can happen very, very quickly. And I think you just want to keep that in the back of your mind and not be stubborn with anything and make sure you're really managing your risk, because this has been a historic market these last couple months. There's been a tremendous amount of opportunity to make a lot of money. And if you are on the wrong side of that and you don't manage your risk properly, it's a recipe to do a lot of damage to yourself. So you got to kind of find that sweet spot of, let me put myself in the position to make money on these big moves when I capture them right, but don't be stubborn if you're on the wrong side of it. Stop yourself out, have a game plan for risk management, and then the risk reward can be phenomenal for you. You just got to stop yourself out when you're wrong, and when you're on the right side, recognize this is not a market that you just want to make 20 cents and get out of everything. The movements are so massive. Capture them. One of my favorite traditional trader sayings to hate on, and I'll leave it with this, is that you don't go broke taking profits. I think you do go broke taking profits if the move that you had the potential to capture is massive and you only capture a tiny bit of it, yet you still allow yourself to be there for the entirety of the risk if your trades fail. This is an environment that can pay you big when you're on the right side of things. Get paid.
Awesome. Okay, everybody. Thank you for joining us. Yes, Jacked Orange Man is saying, so don't be a sissy. That's exactly what Derrick is saying. We're glad you got
well, then just don't show me a bowl from Chipotle, because
listen, can I just say something? I think this just needs to be said, okay? I think we all learned one thing today that's really important. Derrick is an awesome trader, and he says really smart, amazing things that I'm unable to repeat because I was dropped on my head as a child repeatedly. But when he asks you out on a lunch date, make sure to pick the restaurant, or you may find yourself sitting on those uncomfortable industrial metal tables next to a bunch of soccer moms from Schenectady and a bunch of German tourists looking for the Bundeswolfe. Okay, so Smith and Walensky, please, and make sure you pick the restaurant. All right, no unpleasant surprises.
All right. Actually, The restaurant should be Chili's, and we all know that. Okay, everybody, thank you very much.